Welcome to Money and Matterz podcast. I am your host, Yasmine Belle. Coupled with my corporate, tax, and CFO background, I am a financial relationship coach, empowering women and couples to ignite the desire for an intimate relationship with their money. In this podcast, we create a safe space discussing all things money and matters through strategic money moves to build an electric life, both personally and professionally. So let's ignite the CEO in you to take control of your finances and decide today if you are a passenger or driver of your financial life. In today's episode, we cover the American dream and aspects of buying or renting a home and where is society heading. The goal in today's episode is to identify the expenses, the gains, and the opportunity costs that align with your lifestyle you desire, and at the same token, to be able to build a solid financial plan and long-term investment. In today's economy, where we find ourselves renting more than buying in the United States, which has increased due to the millennials choosing to rent, as we see more and more of the nomad style living. The notion of wanting to go wherever, whenever has increased in the last few years, as well as the need for freedom from leases that tie you down, especially for individuals that love to live the nomadic lifestyle and can work remotely anywhere, which is the new way of working and living that allowed us to use this freedom from the old ways of showing up to an actual office space. We also found co-living establishment offering an array of choices when it comes to the comfort of one's lifestyle. I will personally never forget the 3 months I took 2 years ago to live in Lisbon while working on my second business, and I could honestly write a book about the experiences and how it has impacted me today and how I operate my business and see opportunity. Nomadic lifestyle is growing so rapidly that long-term leases will eventually be a sign of the old. Buying a home is also known as the American dream, the white picket fence, the dog, the smell of baked cookies in the oven. However, there is a lot of factors to take into place when purchasing a home, as well as doing your research and being able to identify all costs, including invisible costs. So these phantom costs also need to be factored into your calculation if you purchase a home and if it is best suited for you for the current moment or long-term needs. Here are 8 steps for best decision making when purchasing or renting a home. Number 1. Some factors to take into account when buying a home is to be sure that your lifestyle and location, it really lines up with your dream home. For instance, if you live in Santa Monica and you love to be by the ocean and your lifestyle is walking to your coffee shop and not really driving much and, walking to lunch around the corner, walking to work, or even jumping in a quick Uber to meet a friend a few blocks away, you get the point, right? Now, if you love Santa Monica and you love that walking lifestyle, but cannot afford to purchase a home in Santa Monica, then purchasing a home way in BFE to live the American dream of owning a home is just not the ideal situation because you will most likely feel unbalanced, unfulfilled, lonely, as you will likely lose the view of the ocean, the vibe of the Santa Monica lifestyle, your walking distance, to coffee shops and things like that you love so much. So this is called an opportunity cost. An opportunity cost is giving up something for something else. So be clear on why you want to purchase the home and what rewards of owning the home will give you both intrinsically and financially. Really knowing and understanding your lifestyle needs will allow you to really align with yourself and align with joy, happiness, and goals in the long run. So misalignment of your lifestyle will leave you unfulfilled. So this is very important, why you can pin down and really be clear of why you would like to buy a home. So that would be number 1, knowing where you would love to live and your lifestyle needs. So that would be number 1. The second would be the cost of renting versus buying is the question I get asked so frequently. Why? Because we all have this notion that purchasing a house is a lot smarter and only the most savvy people with good financial practices get to participate in. Well, not so fast. Purchasing a home is a huge financial decision that one shouldn't take lightly. We shouldn't make the assumption that if your rent is $3,000, then I could afford a house with a mortgage of $3,000. That type of thinking will get you in financial doo-doo and shows that you have not done your due diligence in the accounting of the phantom costs and other related expectations of owning a home. When you rent a home, most of the repairs and maintenance costs of your home get completed by your landlord. So that wouldn't really be an extra cost to you. But when you buy a home, well, all those costs now need to be added and are actually paid by you. So guess what? Now you have to dip into your emergency fund to pay for those repairs. And this is, of course, assuming that you do have an 8 to 12 month emergency fund. Also, when you rent, you're not likely to pay for a gardener, a pool man, or some other utilities, which are included with your rent, making it affordable. But when you purchase a home, you have to take into those costs into consideration. Cost of maintenance, of keeping up with your property, such as the gardener, the pool man, the pest control, and other equipment and supplies to maintain your property. Number 3, additional costs to consider are property taxes, which you have to pay when you own. And when you rent, those fees are factored into your monthly rent payment. Number 4, there's also PMI, which if you don't know what PMI stands for, then you are not likely to be ready to purchase a home just yet, as doing your homework should be the first step to ensure that you are getting yourself into a safe financial situation. PMI stands for Private Mortgage Insurance. In other words, this is the cost that the mortgage company will tack on to your mortgage payment if you do not have the 20% down to put up front. So basically, they will incur this cost onto your mortgage payment until the 20% has been met. In addition, if you do not have the 20% down payment to put down on a home, then you are not likely to be ready to purchase a home. Again, a home is a huge investment and should not be treated lightly. This is a long-term financial decision and commitment. The more you know the ins and outs of purchasing versus renting a home, the better you can make sound decisions for yourself and your long-term financial goals. Number 5, purchasing a home can be very exciting and extremely rewarding. And the one tip that I can give you, if you decide after doing all your financial calculations that purchasing a home is your best financial outlet, then be sure when you're purchasing a home that you can see yourself living there for at least 5 to 10 years, even if you choose to live there for 2 years to avoid capital gains. I purchased my first property when I was 18 years old with the $10,000 that my grandmother gave me when I was 18. So at 18, I could have done a lot of things. I could have spent it on traveling, purchase a car, spent it on clothes, shoes, but I decided I wanted to purchase a condo because for me, my value was security. So I valued security foremost, and that was one of the big financial decisions of my time because I ended up remodeling the interior while living in my condo, and I sold it 2 years later for a profit, then rolled over that profit into the next property, which was slightly larger and a little bit more expensive by the university where I was attending. And, and I did the same, and I kept doing the same things over the course of the years. So I was able to not only set myself up for financial success, but I was able to add value to my home by adding features that would, in a long term, give me a better return on my investment, known as ROI. Now, did I plan for that at that time when I was 18? Absolutely not. But as the time went on, I found myself really good at interior design and building a nice side hustle that allowed me to really live the lifestyle that I wanted without feeling depleted. At that time, I was a full-time corporate accountant working for a Fortune 500 company, so I had to do this with my spare time, which added so much value to my life. So the more clear you are about why you would like to purchase a home or stay renting is going to be beneficial to you so you can make the best decisions for yourself at the moment and also long term. Number 6, another aspect to consider when purchasing a home are your taxable benefits. So as you prepare your financial property audit and crunch those numbers out, you will find that in most states you can deduct interest income on your taxes. And when you rent, you're not able to take on those deductions. So interest income in the state of California is up to $10,000 max per year. So if you're self-employed, you can also deduct a percentage of your home expenses, like your rent, your utilities, repair, maintenance, as part of your business expense. But how much is the question I get asked frequently? Well, that would really depend on your usage of space. So reach out to your tax accountant and they will be able to give you that information, even if they give you an estimate. So at least you will be able to kind of play around with those numbers. Number 7, if you decide to purchase a home, know the type of mortgage loan you want and would be qualified to carry. In our current conditions, interest rates are so low, and there's opportunity to get a loan at a very low interest rate. But the question to ask is, 1, how long is the loan for? 15 years, 30 years, etc. And number 2, is the loan principal and interest or interest only loan? So these are huge factors and questions to ask for your end goal and what the property will be worth in the future. So take in consideration inflation as well. Number 8, and if you Google mortgage calculators, it should give you an average mortgage payment / cost. And once you figured that amount out, you can add to it your utilities, your property tax payment, your PMI, if you choose to go that route, and other repairs and maintenance expenses to give you an overview of your full financial costs. Lastly, be clear on the opportunity cost of renting versus purchasing would be and the alignment with your lifestyle needs and long-term goals. Thank you again for listening to Money and Matters podcast presented by WomanCEO Inc. Tune in each Monday for a new episode. We would love to support you in your financial journey, so please be sure to link up to our members' Facebook group at WomanCEO Money Chat. Write your posts and all questions, and I will answer by providing you action steps, turning your money situationship into a relationship. So if you love this episode, be sure to subscribe to our blog at womanceoinc.com. Thank you again for allowing me to share my voice with you and for all your support. Until next time, ciao.